Beating the Street, the best-selling author of One Up on Wall Street, shows you how to pick winning stocks and develop a strategy for mutual funds. Author Peter Lynch with John Rothchild. This is a book summary. Today we're diving into one of the most celebrated investment books of all time, Beating the Street by Peter Lynch. If you've ever wondered how to outsmart Wall Street professionals with your investments, stick around because Lynch's strategies are not just for the pros, they're for everyday investors like you and me. So grab a coffee, hit that subscribe button, and let's get started. Scene 1. The Legend of Peter Lynch. Let's start with a quick intro. Peter Lynch isn't just any investor. He's the legendary fund manager who turned the Fidelity Magellan Fund into one of the most successful mutual funds of all time. Under his leadership, $1,000 invested in 1977 grew to a staggering $28,000 by 1990. That's an average annual return of almost 30%. But what's even more impressive, Lynch believes that everyday investors can beat the pros at their own game. And Beating the Street is his guide to doing just that. But what really sets Lynch apart isn't just his track record, it's his philosophy. You see, Lynch isn't a fan of complicated financial models or trying to predict the economy. In fact, he's famously skeptical of economic forecasts. He once said, "If you spend more than 13 minutes analyzing economic and market forecasts, you've wasted 10 minutes. His point? Trying to predict the market is a fool's game. The real secret to investing success lies in understanding businesses, and that's something anyone can do. And here's the kicker. Lynch didn't just talk the talk. He walked it too. While other fund managers were glued to their Bloomberg terminals, Lynch was out in the field, visiting factories, chatting with store managers, and even taking stock tips from his wife and kids. His approach was so hands-on that he was known for visiting as many as 40 companies a month. For Lynch, investing wasn't about crunching numbers in a cubicle. It was about getting your hands dirty and seeing how businesses actually worked. Scene 2. The core strategy. Invest in what you know. It's a simple idea, but don't let that fool you. According to Lynch, this is one of the most powerful tools in an investor's arsenal. He believed that the best stock picks often come from your own backyard. The brands you buy, the stores you visit, and the products you use every day. Here's a real-life example. Lynch's investment in Hanes, the company behind Legs pantyhose. His wife mentioned that every woman she knew loved the legs. So Lynch did what any good investor would. He hit the stores, talked to customers, and soon realized that Legs was flying off the shelves. He bought the stock, and it paid off big time. And that's just one example. Lynch discovered Taco Bell by noticing the long lines at its stores. He bought Dunkin' Donuts after seeing packed parking lots at every location he passed. For Lynch, the next great investment wasn't hidden in some analyst's report. It was right in front of you, as long as you knew where to look. Scene 3. The power of do-it-yourself research. Lynch was a master storyteller, and he believed that every investment should have a story behind it. Not a complex, multi-layered saga that only a Wall Street analyst could understand, but a simple, straightforward story that anyone could tell. Take Ford, for example. In the 1980s, Ford was trading at a rock-bottom price because everyone was convinced that Japanese automakers were going to crush the American car industry. But Lynch saw something different. He saw a company that was fixing its problems, launching new models, and improving quality. His story for Ford was simple. Ford is making better cars at better prices, and customers are coming back. That story turned out to be right, and investors who listened made a fortune. Lynch's advice? If you can't tell the story of why you own a stock in a few simple sentences, you probably shouldn't own it. Lynch insists that picking winning stocks doesn't require an MBA or insider info, just a bit of legwork. He breaks down his research process step by step. 1. Understand what the company does. If you can't explain the business in a crayon drawing, don't invest. 2. Look for boring or off-the-radar businesses. Lesser-known companies often present better opportunities. 3. Check the balance sheet. Strong financials are a must. 4. Know the story. Every stock has a story. Make sure you can tell it in one sentence. For Lynch, the best investments often come from the most ordinary places. He highlights how he discovered stocks like La Quinta Inns and Taco Bell simply by observing their growing popularity. Scene 4. Classifying stocks, the 6 categories.